Eric Muathe, Muathe.com with world market analysis for the weekend of April 1st and April 2nd, 2017. Let's take a look at markets here. We can see, let's call it a mixed bag. As far as Asian markets are concerned, that's how they closed on Friday. Take a look at European markets at the close of Friday's session. And again, we see, let's call it a mixed bag. And we can see the Americas with about half a session to go on Friday. This is how markets are shaping up for the day. Let's take a look at those world market charts. And we're going to begin with the Australian market. And in this video, I'm going to spend most of my time looking at monthly charts now that we've closed for the month of March and we are due for a new month at the beginning of next week. It makes sense to look at monthly charts so we make sure that we account for the big picture as we go along. So let's take a look at monthly charts beginning with the Australian monthly, and we can see here we are still dealing with potential breakout, and we can see that at the end of March 2017 5898.48 was the previous monthly closing high from 2015. And we can see at the close, at the end of March 2017, this is a failed breakout. As of right now, the market closing at 5864.90. So we can see this is a failed breakout attempt. Maybe the market tries again in the new month, but as of right now, did not close above that previous monthly closing high. Don't forget, we are still looking at potential resistance on the RSI top lines on the monthly. So if the bulls want to move this market higher, they need to trade above that blue line. And in this video, you're going to see a lot of this, where we are coming back to test the break level of recent highs. In fact, it's the theme of this video that most world markets are back to test previous resistance levels on the RSI. Here, the break in the RSI gave us the highs of 2015. We got this bear market drop. And now we are coming back to test that level month to month. If this is confirmed as resistance in the new month or in the months ahead, that's going to be suggesting that the next major direction could actually be down. So we can watch for this confirmation of resistance here on the monthly. A failed breakout starts painting a picture of a market that more than likely, with a failed breakout, RSI failing to move above these lines here, the chances are the next major direction could actually be down, unless the market can find a way of moving and trading above the resistance lines on the monthly or above the previous monthly closing high from 2015. If we take a look at the Chinese market, we can see recently there was an attempt to break out above this recent monthly closing high. As of right now, this has been unsuccessful. The level we were watching there for a potential short-term breakout was at 3250.03. So this is a failed breakout. Until the Chinese market clears this recent monthly closing high, we can see that the market should be sideways to down. Also, another way of looking at this is if we take this break, the RSI break in late 2015, early 2016, this break here brought the market lower, and we can draw a line from there. Should be something like that. You can see that the market has been responding to this line by showing resistance here and again here. So until we can see a price breakout and the RSI moving above the resistance line, we are looking at a market here that is sideways to down. Now I can show you that this line is very relevant. This red line here, if we go backwards, so let's do that. So here we have monthly data going back to 2002. We're going to draw the line again. So this break, this line here in the recent market has been resistance, as you can see here. Now what we are going to do is extend the line, go backwards, something like that. And you can see it gives us interesting points. For example, uniform activity rejection here for the highs of 2004 before we get a bear market. We finally clear above that red line here in 2006 before we have this fantastic run. We break below here, which is this break. Resistance on the same line for the highs there. Resistance here with double top for the highs here and here. Rejection here for the highs there. Come close to that level for the highs there. Recently we went above the red line for this re-entry. We broke below the line and then got rejected here off the highs there. So this line is relevant going back many years, and right now we are looking at double top here and here until the market can move above this line, as we've seen over the last, let's call it 14 years or so. The market needs to clear this red line if it is to see higher prices. So for now, again, sideways to down market would be my prediction. If you take a look at the Japanese market, we can draw a line connecting RSI lows of early 09 and the lows here. Extend that line. We can see month to month, this is where it is struggling to hold above this backtest line. Confirmation of resistance here, and if the market is unable to move above this line, that might suggest that this is indication that the next swing trade or major direction is down. Also, if we go back to the break of late 2007, this RSI break here, of course that's off the highs. We broke down here off these highs. We go into a major bear market. We take that information, draw our uniformity resistance line, something like this, and we can see it coincides nicely with where the market is stalling right now, which is here. So until the market can clear that resistance, there's another layer of information suggesting that this is where markets are stalling. In fact, if you go and take a look at a longer picture beyond the 2002 to current level, let's go back to 1990. And what we are going to do is draw a simple line like that. In fact, let's go back beyond that and go to the late 80s. So here we have data going back to 1981, I believe. I'm going to draw that resistance line, simple line. And you're going to see a couple of interesting things. You have this break off the highs of 1988 and 89. This break here. Of course, we haven't been back to those levels. We can also see that the market used the red line for support here off the lows of 94, support here off the lows of 84 here, not 94, 87 lows here. We broke out above the red line here during this breakout of 82. Resistance on the same line in 96. Resistance with uniform activity here for the highs of early 2000. And then again, as we saw, we break below this line here. And that break brings the market off the highs of 07. We move above the line here for this nice entry in 2013. Early 2013, we go on a nice run. Recently, we broke below the line here off the highs of late 2015. And one more data point is this breakout here in 05 during this breakout, which was successful. So we can see the same line has been giving us major buy points, major support levels, major resistance levels. And right now we are looking at the possibility of what looks like, in my opinion, to be the formation. Currently looks like resistance here. If this is resistance, then we can logically expect that the next major direction is going to be down unless the market can clear and trade above that red line. If we take a look at the Hong Kong market, same type of situation here. We have this recent break off the highs of 15, which is this movement lower. We are coming back to test this at the end of March. So if the market is to move high, it needs to take out that line. Confirmation of resistance here month to month suggests that we are still looking at a possibility of the next direction being down. Also the same line, if we test this line going backwards, we get other critical levels. Let me just highlight a few. The break here of 97. You got the break here of 2000. The break here of 07, 08. Also resistance here during the highs there. So right now the market needs to clear this line, otherwise failure to move above the red line suggests that we are looking at potential for a pullback as far as the Hong Kong market is concerned. Like the Australian market, we can look at the Singapore market, and we got two lines. Potential for topside resistance on the monthly RSI. That's one layer of potential resistance if the market stalls around current levels. There's also the other line, which is this line here, which was the recent break. We break below here off the highs of 15. We are coming back to test that level. So failure to move above the red and the blue line suggests that here possibility of a pullback, maybe even a major bear market, is in play, unless the market can move above those two lines of resistance. Keep in mind this red line happens to be at about 61.8. If we draw a line about that 61.8 level, which is somewhere here, we can see some of the major sell points over the last, let's call it 25 plus years. We can see break here of the highs of 94, uniform activity rejection here of the highs of 96, double top back below the red line of the highs of 2000, on and on. We break below that trend line here, which coincides with the break of the highs of 97 before we go into this major bear market trend. What I'm trying to say here, just like other markets, this is a level that the market needs to move above because it's been a problem going back many years. So failure to move above these two lines in the current market might suggest that the next major direction could actually be down. If the market can move above that resistance line, we might have a chance for a continued move to the upside. And as an example, we can see here, once we moved above the red line, the market had a chance of staging this nice move to the upside. So this is a challenge, either a breakout and a continued move higher, or resistance and we see a pullback. If we take a look at the Indian market, we can see that it is breaking out in terms of price, and the breakout level was the previous 2015 monthly closing high at 8844.60. So right now we are seeing a nice price breakout over the last 2 months, which is what the bulls needed to do. Problem is, if you take a look at the monthly chart, as we've seen in other markets across the globe, this is a tricky spot because failure to move above this RSI break line. So figure out where it broke down in 2015, which is here. Market pulls back. We draw a line from there. So as we ended the month of March, we are still within resistance range here. I've been saying for many months that this is a critical level to watch because it's where the market has been stalling going back to the 90s. As you can see, failure point here in 94 off the highs there, failure point here off the highs of 2000. We fell below here off the highs of late 07, resistance here off the highs of 2010, and finally we broke below here, and now we've been stalling here, and at the end of March 2017, that's exactly where we ended the month. So resistance here might suggest that the next meaningful direction is down, unless the market can move above that resistance line. And if it can clear that line, then we have a chance of adding on to the recent move off the lows of 2016. Same thing with the Nifty. We can see that this is the break off the highs of 2015. Same analysis. We are coming back to test this as of March 2017. Market needs to move above that line. This line has been a problem going back many years. The biggest drops were during this break here. There's also another trend line break coinciding with that red line off the highs of 07. So we need to clear that red line, otherwise this becomes a trouble spot. If the market can move above this level, then we have a chance of recording much higher price levels, but that would need the RSI to trade above that red line. If we take a look at the South African market, we can see for this past month seems to be giving back most of the gains for the month of March. Now the key here is whether it can hold above the RSI 50 level. If it can bounce and continue holding on this RSI 50 level, then it has a chance of seeing a recovery. Otherwise, if it breaks below this support line, if it breaks it and moves to fresh 3-year lows, and if both MACDs or one of the MACDs continues being at 3-year lows with a break of the RSI, chances are this might go into a major bear market tailspin. So we need to hold this RSI 50 level. Otherwise, failure to do so might lead to a major drop. Keep in mind, the reason being that if you take a look at the data going back to 2000, every time it recaptures the RSI 50 level, we get a nice recovery. Recaptures the RSI 50 level, we get a nice recovery. And here we held in early 2016 off the lows here, we recovered. And here we seem to be forming a double bottom. This needs to hold. If it holds, we see a nice recovery. If it fails, then we see it move to 3-year lows, which might be a major sell signal. If we take a look at the German market, it too is breaking out in terms of price above 2015's monthly closing high. So if you consider price by itself, that's a good breakout. But we can see, as we've seen in other markets, what is going on here is the RSI is being tested. In other words, the break of the highs here is still coming in play in the current market. The market needs to stay above this break line right here. So we ended the month of March around those levels. Bulls need to move the market above this red line. Otherwise, confirmation of resistance here on the monthly suggests that the next major direction is down. And this is also true because if you take a look at the longer picture, as we've seen in other markets, this is where it's been struggling. Most of the major bear markets have come when we break below the trend line and also below the red line. So you can see off the highs here in 2000, we broke below here. We break below here off the highs of late 07. So the challenge is to stay above that red line. Otherwise, that becomes another major sell area. Take a look at the French market. And similar situation really. Just draw a line here. This line has been a major break. Trend line break here. Gives you a sell signal off the highs there. Trend line break here. Also below the red line that we've drawn. Sell signal there. And now we are coming back to test this line. And of course, this is from the back test line here. In fact, let me use a different color there to emphasize what I'm trying to say, that there's also this line here. We broke below the line and now we are coming back to back test it. So we need to be above those two lines, otherwise this might be a trap and that the market might actually be setting up to go lower. Take a look at the FTSE. On the monthly, similar situation. We got potential for topside RSI resistance or breakout on the monthly. Otherwise, if you take a look at where it's been stalling off the break, for example here, let's do it like that. The RSI break coinciding with this line gave us a major top here. and another major top during this trend line break. Let's back test that line. So all the major breaks have become around current levels. Break, major high. So we need to be above these two lines, otherwise we might stall here and see a major correction. If you take a look at the Canadian market, given that this was the high of 2014 and that close was at 15,625.73. Interesting observation here is the Canadian market has been unable to close above that price on a monthly closing basis. We failed in January, failed in February. We look to be stalling and failing to break out also in the month of March. So we got multiple attempts to break out. None has been successful so far. So that's a problem. Bulls need to clear that previous monthly closing high from 2014 if the market has intentions of seeing higher prices. The more we stall to break out here, the more we fail to hold current levels. Chances are eventually we give back some gains, maybe even into a bear market because of this failed breakout attempt. So a successful breakout is needed if it is to convince people that the market has a chance and the intention of moving higher. There's also a line that is coming in play, and it's a back test line. This break here, just do it like that. This line was a break line when we moved below it here, and now we are coming back to back test it. Also, if the market is to do well, it needs to sustain levels where the RSI holds above 69.1. So we need a price breakout. We need the monthly RSI to also stay above 69.1 if the market is to do well. Failure for price to break out, failure for the RSI to hold above 69.1 actually becomes a problem. And where does this line come from, this RSI line? It comes from the lows of 09. So let me show you that. And here we have the lows of 09 connecting the lows here of 2012, lows of 2013, and then the break. So this line goes back. And so what we are doing is back testing that line there. Failure to hold above that line could also be a signal that the market is getting tired and that the next major direction could be down. Keep in mind, we've come a long ways from the lows here of January 2016 to the current highs. That's a huge recovery. A pullback also would make sense. If we take a look at the Brazilian market, no surprise, it is currently stalling around current levels, given that this was the break of the highs of 2010. And as you know, we've been watching this level. Why? Because it was resistance during most recent highs. For example, it stalled on this red line of the highs here. We stalled on the red line of the highs there. And over the last couple of months, we've hit that line twice. So that double top still remains to be a problem for the Brazilian market. Until we can clear this red line, chances are this market still might have to go lower. If we take a look at the Chilean market, we can see that it is one of the markets that is showing a nice breakout on the monthly. RSIs and MACDs are moving to 3-year highs. Checks all the boxes, which might explain why it has had a nice run since the recent breakout. This breakout here has been successful. Market continues to act well. So that's the 3-year monthly chart. If we take a look at a longer picture, now that we are coming to the end of the month, now there's a question mark as to whether it can sustain levels above current price levels. Given that this current move is coming back to test the break here, this break off the highs of 2011 coincides with the movement of the highs. And pretty much what we are doing is coming back to test this line here. So month to month, this could also be a trap for this hot market. We shall see. And if we backtest that same line going backwards, we see it gives us another break level of the highs of, let's call it about 2007. And that break line goes back and coincides with this break. So that gave us also another sell signal level of the highs here. So clearly coming back to test this level, if the market here can move higher, needs to clear that red line. Otherwise, confirmation of resistance in the coming month at this level might suggest that now we are due for a major pullback. Eric Muathe with Muathe.com. Of course, I'll keep you guys posted week to week. Enjoy your weekend. Enjoy the month of April. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings.